Hi everyone, welcome to my presentation on how inflation impacts stock markets. Inflation is a hot topic these days with prices rising across the board for goods and services. This is having a ripple effect on the stock market with investors wondering how inflation will impact their investments. In this presentation, I will discuss the relationship between inflation and the stock market. I will explain how inflation can impact stock prices. And I will discuss the different types of stocks that tend to do well in periods of high inflation. I will also provide some tips for investors who are looking to protect their portfolios from the effects of inflation. So what is the relationship between inflation and stocks? The relationship between inflation and stock market is complex, and there is no easy answer. In general, moderate inflation can be good for stocks as it can lead to higher corporate profits. However, high inflation can be negative for stocks as it can lead to higher interest rates and slower economic growth. When inflation is moderate, it can be good for stocks. This is because moderate inflation can lead to higher corporate profits. As prices rise, businesses are able to charge more for their products and services, which can boost their bottom line. This can lead to higher stock prices, as investors are more willing to pay for shares in companies that are likely to generate higher profits. For example, let's say a company has a profit margin of 10%. If inflation is 2%, then company profits will increase by 2%. However, if inflation is 5%, then the company's profits will increase by 5%. This can lead to a significant increase in stock prices as investors are more willing to pay for shares in companies that are generating higher profits. So what about high inflation? When inflation is high, it can be negative for stocks. This is because high inflation can lead to higher interest rates. As interest rates rise, it becomes more expensive for businesses to borrow money, which can lead to lower profits. This can also lead to slower economic growth, which can hurt corporate earnings. As a result, stock prices can fall when inflation is high. For example, let's say a company has a cost of debt of 5%. If inflation is 2%, then the company's net profits will decrease by 3%. However, if inflation is 5%, then the company's net profits will decrease by 8%. This can lead to a significant decrease in stock prices as investors are less willing to pay for shares in companies that are generating lower profits. So how does inflation impact value stocks and growth stocks differently? Inflation can also impact the performance of different types of stocks. Value stocks tend to do better in periods of high inflation as they're typically more affordable and offer higher dividend yields. Growth stocks, on the other hand, tend to do worse in periods of as high inflation as they are more expensive and their earnings are more sensitive to changes in interest rates. Value stocks are typically companies that are trading below their intrinsic value. This means they are undervalued in the market. Value stocks tend to do well in periods of high inflation, as investors look for companies that are trading at a discount value. Stocks also tend to offer higher dividend yields, which can provide investors with a hedge against inflation. Growth stocks are typically companies that are growing rapidly. They are often priced for perfection, meaning that they are trading at a premium to their intrinsic value. Growth stocks tend to do worse in periods of high inflation, as their earnings are more sensitive to changes in interest rates. This is because growth stocks often need to borrow money to finance their growth. When interest rates rise, it becomes more expensive for growth stocks to borrow money, which can hurt their earnings. As we can see, the impact of inflation on the stock market is complex and depends on a variety of factors. In general, moderate inflation can be good for stocks, but high inflation could be negative. Investors should carefully consider the inflation outlook when making investment decisions. In addition to the factors mentioned above, inflation can also impact the stock market through its effect on consumer spending. When inflation is high, consumers have less money to spend on discretionary items, which can hurt sales for retailers and other businesses. This can lead to lower corporate profits and lower stock prices.